Risk markets have clearly come a full circle. So is the worst of the reciprocal tariff scare behind us? That's the question we're asking in today's Indianomics. Now watch this, the table that will come up for you. Pre-April 2nd, that is the pre-reciprocal tariffs, the US indexes, say S&P for instance, was at 5670, NASDAQ 17,150 thereabouts. Post-reciprocal tariffs, they fell about 15%, as you can see. And now, after the U.S. China deal over the weekend, they are back above their April 2nd levels. Likewise, you can look at the Nifty, or you can look at the dollar index. The Nifty as well, 23,350, falls about 15% after the reciprocal tariffs, and now back above the April 2nd, or back above the reciprocal tariff levels. Likewise, for the dollar index, it's not quite climbed back to the pre-reciprocal index levels, but the rupee definitely has. It fell to a low of 86.50. Gold is the other way around. Gold being a haven when risk aversion is high. It was high during the time, it was low during the pre-reciprocal tariff. After the tariff, because risk aversion was at its height, gold went to a high of 3,500 and now is back to the pre-reciprocal times level. So the question we are asking is the worst of the tariff threat over? And if yes, which assets will smart money chase? First, I'm joined by Neeraj Seth, founder and CEO of 3R Investments and formerly head of fixed income at BlackRock. Neeraj, thank you very much indeed for your time. That really is the first I'll ask you the big question and then come to the nitty-gritties. Do you think the markets have priced the worst of risk aversion?
I think the markets certainly have priced out all of the risk from the tariff and more. Obviously, there's an element of positioning that plays a role here, but I do think looking at the 120-degree turn, not 180, from President Trump, I do think the worst of the tariff scare is behind us. It's not done, it's not over. And the fascinating thing is that the investors are actually celebrating a 10% across the board tariff and still the remaining uncertainties in front of us. But it's not as bad as what we saw on April 2nd.
Yes, I agree that it is 120-degree turn and not a 180-degree turn because the president has said this is a 90-day truce. But is the market seriously pricing in something worse than 30% tariffs on China or a return to very high tariffs?
So I do think the markets, in fact, are moving more towards pricing even below whatever the last number, around 30, that was in the news. For a simple reason that in any negotiation, if you start from 0 or whatever the last number was, or 10, that cross-the-board tariff versus 30 as the discussion point, the markets would expect the meeting point to be somewhere in the middle. So the pricing that I see at this point actually is reflecting a better outcome than even that 10 and 30 that obviously President Trump has been talking about.
Okay, let me ask you some unfair questions first. You are a fixed income expert, but I'm going to ask you if the best of gold is over for the moment. If risk aversion of the worst kind is already priced in, then gold doesn't go back to $3,500 for now?
If I have to predict, gold will go back to 3,500, but it'll take time. Part of the reason, exactly what you said, the near-term risk averseness and the uncertainty has come down, which is bringing gold back down. But if I take a step back and think about the world that we live in and the global reserves that sit in US dollars, the exposure the world has in US dollars, I do think the systematic reallocation is still going to happen over the coming years, and gold will be one of the beneficiaries, whether it's in the central bank portfolios or individual portfolios. So it's going to be a structural bull run, but a cyclical correction that we are going through. And I do think right now, near term, you probably have more to correct on the gold, given the uncertainties coming down and market is pricing the other side. But longer term, I still think gold will go higher.
Okay, so that is something like a buy on dip strategy that you're giving us. Okay, let me come to now the Asian okay, where smart money will go. Do you think now smart money chases risk assets like equities?
I think there is some reallocation happening. There's also, as I said, the technical backdrop of positioning. The CDAs were short given post the moves in the market post April 2nd. I think that readjustment is happening. I do think the smart money will still look at more diversification, first of all. Very high concentration that you see at this point in the US equities and US tech for a number of investors. So I think diversification is going to be one element. And if I take that lens, and think about the markets that will benefit. In my view, Europe will get a little bit of that reallocation benefit. Japan and India, in case of Asia Pac, will get that benefit. So you will see some of that money flowing back in these markets.
Okay, now let me come to credit. India, even at the worst of times, continued to receive money in the bond funds. I think there was practically a couple of weeks when we didn't get, otherwise money was coming. How will bond funds look at Asian credit and particularly Indian credit?
So broadly, the Asian credit, I would say, is at this point fairly priced. I do think the spreads have a risk of widening, and because credit is not an asset class that loves uncertainty, and that's something which hasn't gone away from the market. So credit, I think, still has a little more risk of widening if you take a 6 to 12 month view. India is slightly different, and part of what we have talked about in the past, that when you look at the Indian markets, one, you have a fairly big high quality market, including the government bonds, PSU, and small corporates in the capital market perspective. And then you have the growth of private credit markets. And the global exposure, the foreign exposure in the India onshore story, despite all the news flow, is still not very high. So I do think India will continue to see those flows on a structural basis, at least for the foreseeable future.
Oh, yes. We also got a lower than expected inflation number for the 4th month running. So there are other reasons why Indian bonds are looking very attractive, even for domestic investors. But coming to the one, asset class which has defied all the risk move up and down, U.S. bonds. I mean, 4.53 after you've seen what one must say is, some end of uncertainty. What explains the rise and rise of US yields?
Well, part of it is obviously the markets are going through the respite, and hence you are seeing the sell-off in the bonds, which had a little bit of a tailwind or a support because of uncertainty and the risk of recessions that the markets are pricing in.
Okay.
And equally importantly, if we look at the fiscal financing and the monetary policy path, I still think there's a challenge there. On the fiscal financing, US still has a fairly heavy fiscal financing with close to $2 trillion of deficit that needs to be funded this year, and it's not coming down anytime soon. And on the monetary policy path, which is even more complex, I do think the Fed is sitting in the middle of very dense fog of uncertainty, both on the inflation as well as the employment front. So it's going to be hard for the Fed to move. Their best case scenario is to sit and wait. So between the financing, which is pushing the term premium higher, and the Fed uncertainty or the lack of Fed moves, which is keeping the front end also pricing out a little bit of the rate cuts. I think looking at the curve, the way it's behaving, I'm not at all surprised. If anything, I do believe the long end can actually keep backing up more.
Oh, going towards 5, you think?
I think 30-year crossing 5 is, well, we're not very far to begin with, but I don't think that should be a surprise. You still, when you think of fiscal financing, end of the day, the clearing price is a function of supply, demand, and where obviously you could get the investor interest. And the foreign demand is, although hasn't gone away, but it's not as strong for the US treasuries at this point.
Okay. Time permitting, I wanted to ask you a little more about US treasuries, but let me come to the dollar index. We have seen the dollar index recover somewhat from the sub-100 levels, but give us your view on whether dollar strengthens from here on, and therefore the dollar rupee in particular, not other Asian currencies.
So medium horizon, I'm still in the camp of dollar weaker, and that's mainly to do with more of the flow picture that you see on the back of the tariffs, the global exposure to the US assets, which is north of $30 trillion in the liquid markets. And hence, as some of that reallocation happens, I do think the dollar still has potential to weaken further. On the dollar INR is interesting because you have, in addition to what happens to the dollar, you have RBI sitting on the other side. I think that stays more sideways. with potential slack, if anything, over time, some strengthening driven by the flows.
Okay. Well, some strengthening because of the flows, yes. Neeraj, now a big question. We may not have time to flesh it out completely. Do you think the next big problem for all financial markets will not be the end of this 90-day period, but potential tax cuts by the U.S. government, which perhaps is just a few weeks down the line?
So interestingly, that's an important point because the market can normally focus on only one thing at a time. And that focus will go towards tax cuts as we cross middle of the year. So you're right. I think that focus shift will happen. That also, to some extent, keeps the tailwind for the markets in the near term, because obviously the regulatory aspect and the tax cuts still have a bit more of room for the tailwind to be there. So I think that will move. Now, the interesting thing will be, I would say the bigger point the markets will focus on as we get into July will be the earnings from the second quarter, because the uncertainty that got created was April 2nd onwards, which is not captured at all in the first quarter earnings. So the second quarter earnings, you start to see a little bit of initial impact of these changes. And I think that will be more important in my view.
Okay, then a quick last question. Because of that, will U.S. exceptionalism fade or will it rise?
I think on
tax cuts.
I think on the margin, the U.S. exceptionalism little bit fades, partly to do with obviously the policy uncertainty that has been created. But when I look more from a corporate perspective in terms of innovation, growth, the technology aspect, the overall focus on shareholder value creation, the depth of the capital markets, I think U.S. still remains an important market. It's more a question of how much exposure a non-U.S. investor should have in that market. But it doesn't change the focus on the return on equity and the shareholder value creation that we have seen over the last 40 years.
Okay, a rupee appreciation. That's not the majority view in the market. But thank you very much, Neeraj, for clarifying how the U.S.-China deal is impacting Asian credit markets and currencies. We have to take a break, and thereafter we have two more experts joining us. Louis Kuijs, the economist from S&P for Asia Pac, and Mitul Kotecha, the head of Forex at Barclays Bank, to discuss whether the U.S.-China deal is going to bring more strength to Asian currencies. Welcome back to Ideanomics. Well, we have been discussing whether the U.S.-China deal has completely erased the worst possibilities of tariff wars and whether it can actually lead to some growth upgrades, at least for Asia, for China in particular. Also, what happens to yields and currencies in Asia now that the overhang is gone? Joining me are Louis Kuijs, the Asia economist of S&P, and Mitul Kotecha, head foreign exchange FX at Barclays Bank for EM macro strategy. Gentlemen, thank you very much indeed for your time. Well, Louis, let me start with you on the first growth picture. Any changes to S&P's growth forecasts for the global economy or for China because of the U.S.-China deal?
Well, Latha, definitely the lowering and suspension of tariffs between these two large economies is a plus for the global economy and for these economies themselves. It matters a lot for China. We will be looking at that again. These things take time, changing one's forecast, so we don't do that overnight. But definitely, this is a positive for the economy. It will also, of course, probably mean a bit less stimulus necessary in China, but that's all a good thing. So this by itself is a piece of good news, even though, of course, there remain quite a few areas of uncertainty, both with regard to the U.S.-China dimension and also more generally. There's still a lot of, uncertainty hanging over that global trade arrangement.
Oh, yes, let's not forget that this is a 90-day truce. But Mitul, what is the sense about, first, the Chinese yuan? We saw that rapid appreciation, almost 7.18, even 1.7 on a day, on an hour. Do you expect that there will be an appreciation of the yuan that we should be prepared for? What are the ranges you're looking at?
I think at the moment, you're right. We had an initial positive reaction in the yuan on the back of the trade truce. But the reality is, I think it would be hurting China's economy if we do see continued appreciation of the currency. Now, obviously, the dollar has been very restrained, but our view at the moment is that the pressure on the dollar, the headwinds to the dollar have been fading, and we don't see much more downside from here. And so, in that sense, currently, if you look at the fixings that we see on a daily basis, PBOC sets these fixings, and they've been generally around this 720 mark. So there's no real sense here that China's looking for an aggressive appreciation of the currency. In this environment. If anything, with a weaker dollar or a weak dollar backdrop, China's benefiting from some trade-weighted improvement of the yuan, actually much like the rupee has done in recent months. So in that sense, they don't necessarily have to see a stronger currency versus a dollar. But our view is still that we will see some depreciation of the yuan in the months ahead. We think that the currency is still one of the release valves of economic pressure, along with more fiscal stimulus and more monetary stimulus. Now, admittedly, the pressure on the economy is less than it would have been given the tariffs truce, but there is still economic pressure, and growth is still coming under that downward momentum without further stimulus, whether it's monetary, fiscal, or via the exchange rate.
Okay. Actually, things are pretty clear when it comes to equities because everyone's reading growth after the U.S. China deal, but it's very confusing on the currency and yields front. Louis, what are your thoughts on Asian currencies? Not just the Taiwan dollar, which I'll discuss separately, but the rupee itself has zigzagged a lot. What is the longer-term view on Asian currencies?
Yeah, I think we've seen a quite remarkable, very interesting, but also unexpected shift in currency markets in the last 6 months or so. Because, 6 months ago, everybody, all the experts were saying that if the U.S. is going to engage in, trade wars with everybody else, that will strengthen the dollar and will weaken other currencies. In fact, the opposite happened. And the opposite happened in large part, I think, because financial markets started to reprice U.S. assets compared to the assets of other economies. We've seen there have been capital flows, into Europe, into Asia. I'm not sure that this is completely over, but I'm also not sure that we can extrapolate from this. I would still expect there to be some at least, risk and uncertainty hanging over those Asian currency markets as that situation on tariffs and what will the U.S. eventually roll out. I think that will still weigh over those currency markets. Having said that, our forecast has for a long time been that if you look at, say, a 3-year period, we expect most Asian currencies to strengthen against the U.S. dollar from a position. In the current situation, most Asian currencies are still quite weak vis-a-vis the dollar on fundamentals. So there is some room still for further strengthening of Asian currencies.
Strengthening of Asian currencies. Actually, a previous speaker also said that, Neeraj Seth. Mitul, what are your thoughts? Is the rupee going to get stronger? First, Asian currencies, but more specifically the rupee.
Sure. Look, I think I have some sympathy with the view because we wrote a piece recently highlighting the massive net international investment positions that Asia has, countries like Korea and China and obviously economies such as Hong Kong, Taiwan. And we've seen the upward pressure more recently on these currencies. You mentioned Taiwan dollar, very, very rapid move in that currency. So I think if you could see a big repatriation of this money coming back into Asia, yes, there could be some severe strength, significant strength in Asian currencies. But again, it's not our base case. We still see the dollar picking up some ground in the next several months. Even though structurally there is some shift out of U.S. assets and shift of repatriation, which is a longer-term path, we will see cyclical and large moves cyclically in that environment. And we still think the bias will still be for dollar Asian currencies to move, or dollar versus Asian currencies to move higher. And I would say similarly for the rupee. I think we're finding a sort of base around this sort of 85 level. dollar rupee. We have seen some improvement in competitiveness more in the last few months. But again, I think the RBI would probably want to avoid any real richening of the currency from these sort of levels. At the same time, I think there will be continued focus on what the CNY is doing, and I think India will focus on that. And I would doubt that we will see a move out of that sort of range that we've been in. Potentially, you could see CNH INR cross also moving, back towards sort of the 12 level where it was some time back. So look, I think that I think the downside risk on the rupee will pick up in the next several months. Not a massive depreciation, but perhaps a gradual depreciation of the rupee.
Okay. Well, actually, the market is quite deeply divided. You just heard Louis saying that, he expects a rupee appreciation, or rather Asian currency appreciation. A lot of this confusion is coming because of the dollar. Why are you expecting a dollar appreciation at all? Trump himself wants a dollar depreciation. Is the appreciation likely because he may announce tax cuts as you get into the middle of the year?
I think, again, any appreciation is probably a lot milder than had previously been expected, for sure. I mean, I agree with the comments that, everyone had expected the dollar to strengthen on tariffs, and it just didn't happen. And now we're probably seeing better news on the U.S. and less tariffs and less economic impact, less policy gyrations. And that actually, perversely, could bode well for the dollar. So, our view is that sentiment and positioning is really stretched negatively on the dollar, that we might start to see some better news coming through from a point of view of less extreme negativity. And that could help the dollar to pick up some momentum as we go through the next several months after being in this very oversold territory that we're in presently.
Okay. Well, let me just finish the India growth story with Louis. Louis, what are your growth forecasts for India? And interest rate as well. The Reserve Bank's policy is up next month.
No, I think when we look at our forecast for the different economies in Asia, the Indian one, the forecast for India has been among the more stable. We still we nudged down our forecast for the fiscal year, for current fiscal year, to 6.3%, but we expect growth to recover to about 6.5%, and then move up to close to 7%, in 2-3 years' time again. So we've factored in our Indian forecast the impact of that, of really all that trade turmoil. But our medium-term view on India remains pretty positive, with growth of around 6.5-7%. On the RBI, we do think that the RBI will consider there to be room for them to lower rates later in the year. We actually expect 75 basis points of cuts this fiscal year.
Okay, 75. Actually, the market is moving to the view that the end repo rate could be 5/4. But Mitul, the other big question I wanted to ask you is this Taiwan dollar appreciation and the latent fear that the U.S. may impose non-tariff barriers, like asking people to buy 100-year U.S. treasuries, or in some way forcing a depreciation, an appreciation of Asian currencies. Does that threat still remain?
Well, that threat definitely remains. And for example, just yesterday, or last couple of days, we had these comments out of Korea, where there had been some statement and reports that the currency, the Korean won, had been discussed on May the 5th between discussions between U.S. and Korean officials, and we saw quite a sharp rally in the Korean won. Similarly, Taiwan dollar, there is, and I would argue the yen as well, there is some focus on whether currencies will play a part in these trade discussions. And as you highlighted earlier, some in the U.S. administration do want to see a weaker dollar. They do believe that Asian currencies are vastly undervalued, and that they should be strengthening somewhat more going forward. And that is a big risk. And I think that is one of the reasons why currencies in Asia have been doing so well lately and catching up with the moves in the broader dollar sell-off that we saw against major currencies.
A quick last one, Mitul. Why is it that the U.S. bond yields are not coming down at all? They're remaining at around the 4.5 mark even after yesterday's fall. And if they remain at that point, what is the impact for Asia?
Well, it's a good point. And I think the the risk premium, the term premium has been something that's been increasingly priced into the US bond market. The worries that the fiscal expansion in the US is going to get out of hand from a deficit that's already around 6.5%, 7% of GDP. There's still lingering worries about inflation risks. And the Fed perhaps not moving as quickly to counter that. So, and also one other factor remains foreign selling. We go back to the same theme, concerns about foreign selling of US treasuries. Now, we think some of these concerns are overdone. Our US rate strategists have just put out a piece highlighting that they still remain quite constructive on treasuries going out further. So, we don't think this pressure is going to be sustained. But of course, if US rates continue to remain high, that won't bode quite badly for Asia rates markets and Asia overall, because of the fact that we'll see continued funding sucked towards the US. We'll continue to see perhaps some latent pressure on Asian markets because of that.
Oh, yeah, that uncertainty of US yields remains, but otherwise it looks like the worst of the tariff at least is behind us. Louis and Mitul, thank you very much for joining me indeed. That's it on this edition of Economics. Thanks for watching.